Tesla had a horrible week, down 6.5% in the last 5 days. TSLY was down nearly 10% in the last 5 days. So it's no surprise that my fund is also down, but it's only down 3.3%. So what we're going to do in this video, we're going to go through how much money I made last week, what covered calls I sold this week, what's my projected yield for the year, all that good stuff. And then we'll also look at the chart to see where we think Tesla's going to go in the coming week. So if you like the sound of that, all I ask for is that you smash that like button and don't forget to subscribe. If you guys remember, last week we sold a covered call at the 182.50 for $324. So there was no surprise that I managed to close out of this position for a gain of $323. Now, what I was doing recently, I was rolling my call down to capture more premium, but Tesla was dropping quite you've had some big aggressive drops inside here, which didn't really make it worthwhile. I was picking up an extra $3-4 plus when you net out commissions. It wasn't really worth it. So I just left it where it was, just in case it did go back up as well. So again, I can capture some more upside premium from there. So again, we banked in $323, which is $3.23 of dividends of 100 shares, which is 1.41% of the overall capital of the account. So that takes my total dividend payment up to $6,274, which again is absolutely fantastic, which at the current rate, I should make around $21,603, which is 72%, which I think I was at 73% in last week's video. So down by 1%, even though that we were down 3.3% overall. So if we have a look at where we are without dividends, we are down 34% on the portfolio, and with dividends, we're down 26%. So we are still down, we are still collecting cash flow. And again, that's because Tesla did have a massive drop all the way from 176 down to 164.90. So if we look at what we did from a synthetic point of view, as you guys remember, we did the 177.50 expiring April 19th. We had to buy that back for a $977 loss. And therefore, we reset the synthetic at 167.50, with Tesla trading at 164.90. When you look at it, again, another down week on Tesla, which again is the reason why that the fund is down, because the underlying itself is not that great. So, having done this now for since December when this arrow was, and we've kind of been going down from there. What I'm finding is that this is very underlying dependent, and I couldn't have timed it any worse. I probably could have started a week later and timed it up here and call this all the way down. So if you take something like Coiny or Coinbase from a yieldmax perspective, which is giving you over 100% yield, the chart is going the other way. So when you look at it from that perspective, again, it is very underlying dependent on how we're going to try to drive income and drive a capital appreciation growth. So if we look in what we've done over here, as you can see here, we had two drops really. The first drop was down because of the Tesla's demand of the actual cars that were sold month over month was down versus analyst estimates. And then this one here again was something happened in Southern News. I don't really know what it was. I think Elon was speaking or something, but it had a really harsh move down on Friday, back down to these lows of around 160, and then rocketed back up slightly on the same day, and then back down again towards the end of the day. So again, it wasn't the best of weeks. And what I've done, I've changed this up slightly. So I've kind of shown you where my synthetic is at the 167.50. And my covered call strike is at 177.50. So it's a quite high covered call strike, actually. It's $10 out. And again, I didn't have the chart available to me. I did this on my phone while I was out because it was getting close to the market close. So I didn't really have time to have a look at the chart, see where things were looking. So I basically got the synthetic at the estimated pivot level for next week. And then ideally, I probably should have put the call at 172 or something like that. But again, what I like to do is I like to put the covered call outside of the premium captured. So my premium captured in this example was 244, which then is 168. I probably should have done something around the 175 or 176 mark to capture that bit more of a premium. But again, if we look at last week, you can see here very classic weekly pivot. It was coming up to the pivot level. It came all the way back down, went all the way up there, used the pivot level as a resistance, and came all the way back down again, this is why I use weekly pivots here. So I'm very, very expecting Tesla to get back to its weekly pivot because it's so close. So if we kind of zoom out slightly, what we are seeing is we are kind of seeing this kind of consolidation period here, which isn't necessarily a bad thing, and I'll tell you why in a second. So we're kind of like in this kind of range. So if we zoom back out in terms of what we've had this downturn, it came back, filled this gap, continued making lower low, and now we've kind of got this consolidation period. So what I'm kind of expecting, what normally happens on recoveries, is you kind of see like this type of movement. So maybe we have the bottom here at 160. I'm actively looking to pick up shares in my main account at around the 150 level. So this is the kind of level that what we're seeing here in terms of a standard recovery mode and what we normally like to see. But again, they do have earnings coming up sooner rather than later. So, you know, this could again take the stock down further. But that's kind of where my prediction is in terms of we might flirt down slightly, but I don't think we'll go too much lower than this. And then we'll start looking to see that consolidation back up. So that's kind of where my head's at with it. And like I said before, I think we are still generating income. We've generated 6.2K. We're estimating 21,000. That's 72%. So again, if we can get there around the 30,000 that we started with, and hopefully we've seen the worst of it with this 34% drop, then again, we can continue to do this strategy successfully. Whereas, you know, we are making less money, as you can see over here, of around this is probably the lowest, I think. Yeah, $2.44 is the lowest that I have made. No, $2.40 in week 6 after earnings, when that volatility really crashed, was the lowest that we made. So again, we are making some historic lows, but we are still maintaining that percentage level, which is the main thing that we're seeing. So again, if you got any questions, comment down below or drop me an email, and I shall see you guys in the next video.